Hello and welcome. Let's take a look at the top 10 cryptocurrencies based on market cap against the US dollars for each of them. With the first one being Bitcoin in and around 110 billion US dollars. They'll all be weighted for this case against the US currency. So far within the day, with about 5 hours to go, price action down about 7 and 2/3%. Just your basic everyday retracement down to the 18 average of lows. The last time this occurred, it managed to get a bounce from. Just because it's at this level doesn't mean that it can't go further. When we take a look at this on the weekly chart, price action's having a little bit of a red correctionary move. The 18 average of highs is in and around the 5,500 area, with the 18 average of lows in and around 4,500 right now. And key previous resistance is a little bit below the 5,000 mark. This has been, of course, in a beautiful uptrend that has had resistance lines getting taken out validly, invalid, not invalid, but in thus being valid, because it continued its upward trend. The resistance line for the current one is had a little bit of retracement so far. Will it have further? Usually it does, but if it doesn't, and you get back up to this point and you have or you have a break above it, that could be a very interesting situation. I think it's not the favorite. I think the favorite is that this does manage to go down lower and meet up within this 18 average. Ethereum is in at number 2. It has a $28 billion market cap. It is about the quarter the size of Bitcoin's. Throughout the year 2016, this market was in a very long sideways correction. It didn't break out well into the year 2017, when it broke north of about 18 and making it to about 400 in just a few months. Since that point, it's been in this correctionary move even further. We'll shorten this time frame out a little bit to the daily chart. And I really don't know what to say about it. It's very easy to say neutrality when the price just stays within the 18 average. I think the best way of playing this is to place buy orders within this trend, a little above the 18 average of lows, at the 18 average of lows, and a little bit below the 18 average of lows, and have your sell orders in place below or right around pretty much at the sell orders of 18 highs when we take a look at this. But then you have a situation where you start to see it starting to increase. That's just a little bit of a trend change. But having sell orders in at around 320, and again maybe here and in here, and if it breaks out, you probably have a quick move up to 400. So I do not like selling at like 370, 380, 388. To me, it just doesn't make any sense. Even 390 is kind of, well, you can get 398, 399 just as easy. If it's going to go to 390, it's going to probably at least pierce below or hit the 400 number. But it's just in a wacky sideways consolidation. It's back and forth almost every day. It's a situation where you can almost get away with hitting 2 to 3 sell orders every single day and getting 2 to 3 buy orders every single day. And it's been this way for, well, even since into September. Number 3 is Bitcoin Cash in at 14 billion. And a huge update today, as we've seen a sideways consolidation, as well as 2 days previous having a flash move down towards the 18 average and in the area of this prior resistance. I would definitely never, I mean ever, not even maybe, consider being a buyer now. I would heavily be considered that of selling. My general rule of thumb is whenever you go to a significant high, which is this one here, I'd really have a hard time counting its original early adoption highs or lows, because the market has to settle in There was enough time within this high to count that, and most certainly this low is huge at about 300. But when you go with a good move down, which is the case here, when the 18 average resisted as often as it does, and it took a lot of work to get to that point, I see big volume. That doesn't mean bigger volume can't proceed higher and it's 2 grand, but it's not usually the case. And if it's going to 2 grand, I would oftentimes think there's a better chance it's first going to come back to any significant level. And then if it does and such, comes back to key levels, comes back to these key averages, then has a move higher, then it makes it a weaker area to sell, because the area to the chances of breaking it would increase. And even oftentimes, if it does resist, it does a sideways move, sort of like this one in here. But what I find interesting of note, because I'm just not going to say just because I think it's a selling time and it's not a buying time. The way I understand markets, it's probability odds. It's just more likely that the chances markets go lower, and or it might just even go sideways as well. Either or. If it goes sideways, you're still going to get small down moves and maybe a pierce like this. That could occur. But if there's not resistance where there's supposed to be, realizing I'm really not giving much of this move any emphasis at all, then there's probably a darn near good chance of decent sized gains. Now I can do some Fibonacci calculations to come up with a high. What I need in a situation like this is for the market to have an uptrend and a good price correction. Uptrend, good price correction. The high is in at, well, we'll say 932, and the low is pretty much 300. Okay, that's not what I wanted. I wanted 932. It wouldn't make much of a difference as it is anyway. Up target, let's go 2000. 1878, and they pierce it extra anyway. Yeah, 2 grand. It's a psychological number. Usually, all for so many reasons. Psychological because it's 2000. Psychological because it's also 100%. Which means if you see price action in at around 1250, 13, holding and staying above, well, holding and staying above 1000 gives it that credentials. Holding and staying above 700 keeps the bullish trend alive and should state that all sell-offs are guilty until proven innocent with this run that has come into place. But you always got to expect it to at least correct to the 18 of lows, and that's bullish, and it's never bearish just to see that. Number 4 is Ripple at about 8 billion. And we can see from this chart, I could have showed you more data, but if you ever were just to see this and you see the 18 average like this, where it's simply just way below where the action was, that means you knew the rallies were much greater, or the price action was much lower than this. Therefore, since May, the market has been in the sideways consolidation pattern. The resistance level at first was close to 40 cents. And then it stabilized more effectively at 32. It then had a couple hits in at around the 30 cents here, a little lower here, and at 30 here. And on the lower end, we have 1, 2 hits at this level, a couple more hits a little above. We could also look at little things like trend line analysis. We have an uptrend in here. This downtrend has obviously been taken out, but not much for bullish tendencies. And it's probably the best maybe to do it with this level. You could probably draw a trend line in this symmetrical point of view because it is noticeable it is making lower highs and higher lows within such. Now, one scary thing about a chart like this, when we look at this on the 3-day time frame, is what happens if support gets taken out. I mean, the last little area which it came from was between 3 and 7 cents. 7 cents from now is losing 2/3 its value. 3 cents, and that's against the dollar too. Well, 5/6 of its value against the bottom end. Although risk reward potential, what happens if we break through this resistance and get past this one? Can this get to $1? I'd have to surely think that it could. The one I will not use Fibonacci upside because this is not a good price correction. This is a good time correction. But I suppose if I would probably use it with maybe 70 as a low, even though it never went there. And just do like between 70 and 360, which is 36 cents and 7 cents. But upside target 990, that's $1 basically, yes. So that's the risk, that's the reward. And of course, it could even go higher than that, but that's the market right now. Next up, Litecoin, 5th ranked, and it's got a market cap over 3 billion and on its 3-day time frame, and I really don't think I need to show another chart. The rate of ascent has surely slowed down. That's much more productive than your normal sideways correction. You can make the same case like this again, just like Ripple. As far as downside action, there's not too much space, but you know what? There's this whole bad area here, so it's not that big of a free fall spot. And one other part of technical analysis I think of as well, whenever you have a quick move like this, especially like a real one like this, not a whatever flash move, but a real type of common situation like this, that when you rebound, if you are actually going to get bearish, the next step often would be that you would find a support level in here and you would find a resistance level where support came from. So in the situation of a down move, that's pretty much what I would expect. It's an obvious downtrend in here, and everything else is very much in a bullish situation. And like a lot of these codes, when they go off, they go off. When this thing broke resistance at around $4, it really didn't even have a test of this 18 average until it came back from close to 40. That's really where it comes down to. And same situation could again be stated again. It might leave this band at like, say, somewhere around 65. And next thing you know, it doesn't touch it until it has a break from like 700 or something. That could very easily be a realistic situation. The next one is Dash. It is in at number 6, $2.4 billion market cap. And this thing is changing right now. It's been in this sideways consolidation. But this 18 average band works for me on so many levels, including this one in here where I'm seeing it's now for 2 days changed its tune. It's now went from barely declining to barely rising. That's an improvement. Reason for that is because of these two highs, which is a statement of breaking resistance. And now this looks like, this might be ready to possibly change over the trend. Because what would technical analysis tell me if I see a clear break above 400? Oh, yeah. Last time when it broke in this resistance, we can just see from the earlier chart in 2016. Here we are confirming these breaks where, it's just safe to go in at around 12, 13, and by this point, it was a definite clear break at 15 or such. And it goes all the way originally to about $1.40 or such. But without even a red candle. Like, how many green candles in a row is this? It's like from here to here. That's 3, 4, 5, 6, 7, 8, 9, 10. That's like 18. And that could be give or take, but that's the type of movements these things can have. So when I talk about what would happen if there's a 400 break, what I want to see happen is I want to see this hold and stay above this level for a decent amount of time. And then you can get very, very giddy. It'd probably be time to accumulate positions and get ready for a beautiful situation. And then when you have the big moves to the upside, I'm going to be looking to sell here, sell there, sell there. And it's this way with every single one of these coins that's not ranked number one. Next up is Neo. It's ranked 7th at $1.75 billion. And again, when this thing's ready to go, where did Neo come from at the end of 2016 into 2017? When you see it just staying within here, that's neutrality, consolidation. Oh, this candle's saying that we might be looking for a break. As long as I can see it hold and stay above what would have been 17 cents at the time, this is what it looks like to hold and stay above it. That's telling you in advance, there's, oh, watch out, this thing might be ready to go. So in this situation, with this being a 3-day time frame, that was about a month and a half, telling you that Neo is ready to go. And did it ever go? On its first candle, it broke resistance at about a quarter, and it never had any move below the 18 average of closes or even close to the 18 average of lows, which all state is here close to the 18 of lows, until it got up to about $15. So from 25 cents to $15, that's 60 times greater. Currently, it's in this sideways consolidation. There are two parts of this. There's the small one that it's been in for many consecutive periods, and then there's this one as well. General technical analysis for me is on any breakout, I'm looking for on the upside a move to come up to this resistance, probably stop going higher, but it could very easily just go sideways like we've seen in here. And if it breaks it, that's not a surprise either. And you're probably expecting it to go. And same thing, if it falls below here, you'd expect to move down to this previous support level at around 14, a little below it. And when they're ready to go, they're probably going to go. But what I want to see happen, like before, it need to hold and stay above this like 16 or 17 cent mark. Now it's got to hold and stay above a little under 40, 37 or 36, 35. If you can see that for a while, then that would be indicating, even if it doesn't even get to this previous 60 level, if it only gets to say 49 or 50, but it's holding the lows, I'd be anticipating this thing to break out very soon and probably go closer to 200. 100 is like nothing of a move. That's like barely, that's not even double. So I would think 150, 200 at least, but we can see in here it went a 60 times gain. I'm not saying that's what it's going to be, but 5, 6, 7, 10x gains are definitely not out of question, I don't think. Number 8 is NEM, also at around 1.75 billion. And this is the weekly chart rather than the 3-day, which the last few charts have all been. And this goes back to 2015, so that's the reason why I'm putting such a long time frame. Sideways move, and look at how much this goes before it even comes anywhere near the 18 average of lows. Breaking resistance roughly at about 30,000 satoshi, or 30,000 303, making it up to 2 cents. 102. That's a tremendous move. And even though this was more of a down move than a sideways move, when it was ready to leave the 18 average, the statement for such was in here. The giddy pattern was right in here. Even on the first breakout, you could have bought in here within this candle that would have came back. Good thing, I hope you didn't stop out. And then you're enjoying the ride. You would have bought at around close to a penny or around a penny. Next thing you know, it tops at 30 cents back down the 18 average of lows at around a little under a dime. So here we are sideways again. Major resistance is at about 30 cents. Now on the daily time frame, we can see that the key resistance is roughly at around this quarter level. And I'd like to see it hold and stay above there for any type of conviction. Just short term, it has made a move up there and a quick red candle play down. Very important for it to hold what will be a newly rising 18 average of lows. When I say very important, I mean really, really important. And when I say watch it, when something holds and stays above, I want to show you a situation where that can go against you. Because in here I'd be wanting to hold and stay above here, and it did a very good job of it throughout the months of August. And then it had this failed breakout. But what did not happen? Well, I guess you could have had a fast move in here, so I guess you kind of did. But it didn't retrace much lower. That was a pretty decent size failed breakout given how big of a situation it is getting above 30 cents. But on any break above here, I would be looking for resistance between north of 30 cents upwards to about the 36. Let's now take a look at the last couple of codes, with Monero being in at number 9. And what more is to say about this beautiful trend on its weekly chart? It has a market cap at around $1.5 billion. And within this previous level, like I've been stating, whenever you come to an area where you expect to find resistance, if you don't, expect it to go like much further quickly. This is but the minimum of a much further quickly move I'd be looking towards, but its follow through has been fantastic thus far. And whenever you see this holding, staying above, well above this 18 average, and key support at about $105, then it could be ready again for its next move. When it made this leg, we can see a very big green candle. This entire duration was just a slow, sure, steady run up higher. But throughout its entire time frame, the gain was pretty darn near good when you consider going from a break here at about 15.16 up to about 160, or a 10x move. You'd have to think that 4 or 500 is more viable for any type of upside targets. Just a break of this resistance level in here, you're looking at about 60, and it did better than double. On its daily time frame, okay, now it has held and stayed above this level for 3 days so far. It's barely there. It's at its support level now. If you're waiting to buy back to where it comes from after this made its move higher, well, buying now is where you're buying. $100, that's the key level. 18 average, it's now starting to rise. The statement was made in here. The statement was made, and that is it's ready to get out of this sideways range and go bullish. That was the statement. So either it's going to work with what the statement was made, and it's going to form the pattern of higher highs and higher lows, or we're going to be talking about failed to break out, fast move lower. I'm guessing it's definitely more probable that this is a buying spot. As I'm doing this now, I'm thinking to myself, should I just add a bit more to my own portfolio here? I probably will, because I do like how this pattern is coming into place. And when these things are ready to go, what you're going to notice priced against Bitcoin, whether Bitcoin is in a bull market or not, it's going to outperform Bitcoin. Because in a situation here on this daily time frame, how many days did it take to get from here to here? A couple weeks, not quite. And it goes up about 170%. Bitcoin doesn't do that too often. And that wasn't even that much of a move compared to what a lot of the other cryptos can make as well. But when you see the break in here, you definitely got to consider a move to between at least 400, I would think, as its breakout target. And in at number 10 at 1.4 billion market cap is ETC, Ethereum Classic. And like so many others, when it decided to have its bull market, how do you do, basically, as earlier this year, down to about $1, but it was trading in a range of under a buck and a half. It was about a buck and a quarter, depending on which day and time you were at, but relatively cheap. It grinded its way up to about 3. It pushed its way huge up to about 8, and then another huge push up to about 25. And 25 is big resistance now because it came back close to it here. It came back to it here. We'll say 24. Along the way, there was a sideways consolidation, which had an interesting breakdown. This was a spot where it had a move up in here. A statement was made at this point. The statement was that it was ready to break out. Oh, we had a failed move, fast move. And that's why when you have the correctionary moves in here, that's what you need to see. You need to see it hold and stay above here. And after its first day, if you look at this candle just ending as it did on the 3-day time frame, you came back and you were back to this previous level. It looked ready to go. Ooh, that was concerning. Super concerning. And there you go, down move. And it's the low now. It's been in a little bit of a downtrend. However, a statement has been made in the last little week, or right about last week of time, as it has had this big move up. First, that was from the 18 average of lows to above the 18 average of highs. Key resistance is in at 13. That's what it needs to hold and stay above now. Well, it's done that now for 2 periods. It hasn't done anything further, but the statement is that it's ready to at least go in either revert trend bullish or test the resistance neutrality. Because neutrality would be simply this, and you have to go back and forth, back and forth. So it's either way, it's making a statement that it's making a move to around the 24 area. Let's take a look at this on the daily chart. And now we can see the actions here of it holding and staying above this 12 mark since it broke it out for the 5 days following such. That's all fine and dandy. There has been several resistance hits south of the 16 area. And the 16 area pretty much is the same as this high, with a little bit of caveat to it, or a bonus, that it's basically congesting in the middle of this previous high because it's went for the last few days in this up and down range consistently. So on a break of really 16, it wouldn't surprise me if it has a fast move, something like this green candle, that would move up to the 24 level. Most likely you would find some sort of resistance. And I'm going to finish this information piece off. Take care.